Monday. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning, you two. How is it going?
Good morning. How are you?
Good morning.
Good morning.
Very good. Bitcoin's looking up. Taking a look at trade blocks indexes, they're now the CoinDesk indexes. Checking out Bitcoin, the CoinDesk Bitcoin Price XBX Index is currently trading at 53,600. Bitcoin is up over 7% over the past 24 hours, and the CoinDesk Ether Price ETX Index is trading at $2,489. The crypto markets in general looking up today. Lots of green on the charts. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, looking at our top story, first of all, Emily, JP Morgan is offering an actively managed Bitcoin fund. And we're seeing, is that the reason perhaps we're seeing a bit of a bounce this morning?
Not sure about that, but it's definitely a long-term bullish sign, because if this isn't mainstream adoption, I don't know what is. Because what's interesting about this is JP Morgan CEO Jamie Dimon is one of the most famous critics of Bitcoin. He said that it was a dangerous fraud. He said, which is incredibly ironic given this recent news, that if you're stupid enough to buy it, you will pay the price for it one day, which is very interesting given that they are now offering a Bitcoin fund. So it doesn't seem that he has completely converted to the Bitcoin camp. He said as recently as last year that it was still not his cup of tea, but he's clearly realizing that this is a force that they're going to have to contend with, and they're going to make it available to some of their clients. Yeah,
it's a bit of a slow walk back. He said it was a fraud. He said it's worse than tulip bulbs. So now he's just saying, it's not my cup of tea. I'm pro blockchain, not Bitcoin. Jamie.
Now he's offering to clients. So
yeah, he might have a low opinion of his clients if he's now selling it to them.
Yeah, Lawrence, Bitcoin's reversing a 5-day losing streak. Could this news have anything to do with it?
No. In a nutshell, no. No. I mean, that's the answer. I mean, this came out after the rebound in Bitcoin and other crypto. One thing we learned over the weekend is that if you do have a price for Bitcoin, just wait. At some point, it's going to happen. Just hold on. Just wait for it. Everything is up today. In the CoinDesk 20, we had just about every asset period is up. But it's been a rough few days in the market. There was a sell-off, obviously, over the weekend, and then a quick rebound. We had some liquidations over the past week, liquidations in the perpetual futures market. That compressed the amount of leverage in the market. But that means that when you had somebody come into the market and sell, like we did this weekend, fewer buyers to meet it. That shot the price down. Monday morning comes in Asia, and you had people come back in. They said, oh, look, let's go bargain hunting. And the price shot up again. So, we'll see if this rebound will last. We'll see if the leverage comes back into the market. But no, Jamie Dimon had nothing to do with this latest rebound.
All right, well, we are seeing more crypto firms make developments in the space. Stablecoin issuer and blockchain startup Paxos has become the third federally regulated crypto bank, scoring a federal trust charter through the U.S. Office of the Comptroller of the Currency. Their new Paxos National Trust entity will hold your crypto, offer stablecoin management, and offer other services. Joining us now to discuss is Paxos General Counsel and Chief Compliance Officer Dan Bernstein. Welcome, Dan.
Thank you for having me.
Just, off the top, what is your reaction to JP Morgan this morning now offering a Bitcoin fund to their clients?
I think what we're seeing here is the institutionalization and the growing acceptance of digital assets in the space. And I think that's really driven more than anything else by the regulatory environment. I think that larger and larger institutions are seeing that the water is warm for digital assets. And that's because the regulators like the OCC, as we've just seen, are accepting and understanding the risks and allowing and encouraging even their regulated institutions to get into this space.
You mentioned the institutionalization. You are actually, well, Paxos has become a crypto bank. Explain the significance and what is really happening here.
Sure. So on Friday, Paxos received the preliminary conditional approval from the OCC to offer a national trust bank. What that means, in effect, is that the OCC reviewed the application of Paxos National Trust to open as a national trust bank. They reviewed our business plan and and agree that the businesses that we operate and plan to operate are acceptable businesses for a national trust bank. They understand and agree that the team that's in place at Paxos has the experience and expertise to carry this out, and that this is a viable business model and something that is appropriate to go forward. And so it's just preliminary conditional approval. The next step really is we've told them what we are going to do in terms of building a national trust bank. Now we have to go and build it.
Mm-hmm. So Anchorage and Protego are also crypto firms that have national trusts that were born in the crypto ecosystem. Meanwhile, Kraken and Avanti Bank are state-regulated crypto bank entities after securing special purpose depository institution charters. So through Wyoming, I wonder, what are the differences? Can you spell that out for us?
Sure, and there actually is a first here because Paxos is the first de novo national trust bank to be chartered by the OCC, by a national regulator. And what that really means is that Paxos is maintaining a dual trust structure. We have a New York State Department of Financial Services trust bank that we have operated since 2015. And now we've stood up a new bank through the National Trust Charter. It basically means that we have clear nationwide authority to operate, whereas New York is the gold standard for state regulation in the digital asset space. The OCC is really the gold standard for national regulation in this space. There are a number of other states that are getting into this space as well. It's a really exciting development across the board for our space because regulators are not just thinking about allowing digital assets and digital asset regulations, but really thinking constructively about how are they going to accept this business? How are they going to control the risks? And while 5 years ago, 6 years ago, when Paxos got its first charter, maybe regulators didn't know as much about the risks associated with the digital asset system, and therefore were more conservative. Now there's a little bit more trust in terms of who are the trustworthy providers in this space, and how are they going to be able to operate effectively and operate in a way where they can identify their own risks and control their own risks, and therefore be appropriate regulated entities in this space.
Good morning. Just to look at a bigger picture question here, one of the ideals behind cryptocurrency and behind Bitcoin was to disintermediate the banks, basically to kind of get rid of the banks. And now, these big players in crypto are essentially becoming banks. Is there a tension here?
I don't know that it's a tension. I think that it's probably the culmination of what you would expect to be the natural maturation of this market. You have certainly, Emily, what you're referring to is the more libertarian, the more hands-off approach that gave rise to this space, and that will always be part of our history, and that will always be a segment of the market. Paxos was founded on the notion that we're going to ask for permission rather than forgiveness. We are going to be regulation first, and we always want to be the most trustworthy provider in the space. And therefore, we're building up our regulatory stack to meet that moment. And the reason for that is, well, first of all, it's the right thing to do. But second of all, we believe that that's better from a competitive business perspective. We are partnering with larger and larger companies, traditional financial institutions, major market participants, and those players that have maybe more conservative risk profiles clearly want to be partnered with a trustworthy entity, and regulation is what is how to signal to the market that we have that kind of trustworthiness.
Dan, good morning. One of those partners, of course, is PayPal. You guys are basically the back end for them, or the engine behind their crypto trading. So what does being a bank mean for that kind of a deal?
Sure. Thanks for the question, Lawrence. And the reason, the background of that is, we have really built up this regulatory structure. It's really a validation of the approach that we've taken. PayPal is a really important partner for us, and we're looking to and have been partnering with a lot of other entities like them as well. And it goes to what I was just talking about. Companies like this are looking for a regulated partner. They want to be absolutely sure they are operating within the law. They want to trust but verify and verify again. And so that means having a partner that has minimum capital requirements, that has a regulator that's examining us regularly, that has audits and policies and procedures that is going to be there when you need them, and is not going to get you in any trouble in partnering with them.
So Dan, of course, you also have a deal now with Venmo, PayPal subsidiary. What will it look like with Paxos as a bank? What will that relationship look like?
Yeah, I think you'll have to talk to PayPal about that. But clearly what we have here is the regulatory stack that more and more partners are going to want to work with us on.
While we're talking about partnerships, you also have a partnership with BUSD and HUSD, two stablecoins from Huobi and Binance. Can you tell us a little bit about that and what you think are the future of those stablecoins? Are they safe? Are they properly backed by fiat? What is your take on those stablecoins?
Sure. Thanks for the question, Emily. And these are part of our stablecoin as a service offering. What Paxos does is we provide all of the regulated financial services activity. We are able to work with our regulators and become the issuer of these tokens, similar to our Paxos standard token. We are the issuer of BUSD in partnership with Binance, and that means that we are responsible for custodying the reserves, for the mint burn of the tokens. And it also means that the reserves themselves are overseen by currently the New York Department of Financial Services, and that we are able to ensure and encourage our customers and let the market know that these are reliable reserves, that they are placed in very secure assets. And we also have our attestations clearly posted on our website. We get monthly attestations by an independent auditor to verify that the number of tokens equals the number of dollars. There's no question about it. You can go to paxos.com/attestations and see them right there.
These coins are pretty popular. Is there any chance that they could eventually overtake the market of the Paxos stablecoin itself?
Oh, definitely. I think that's that we are there for our customers and for our partners. And when we are talking about being financial market infrastructure for other entities, that means that their interests come first. That we are partnering with enterprises, and that we are not in this for a Paxos retail brand. We don't want to be competing with our customers, and therefore we are. And we find this to be a competitive advantage because. We don't want to be. We don't want our partners to be thinking that they're competing with us and that we're going to steal their customers ultimately.
Well, Dan, we can't talk about stablecoins without the now $50 billion elephant in the room. That's Tether. They recently had a deal with. They're now permitted to be traded on Coinbase Pro. How worried should the markets be about that?
The OCC, for example, recently put out an advisory opinion stating that OCC banks can host the blockchain rails in connection with payments and remittances for stablecoin systems and others. And I think what you're going to see is those companies are not going to use Tether. They're not going to support an unregulated stablecoin. There's going to be a lot of interest and a lot of excitement for regulated stablecoins to be adopted by the traditional financial markets and traditional financial institutions.
All right. Dan, thank you so much for weighing in on the stablecoin space, and congratulations on your latest federal trust charter.
Thank you for having me.
All right, that was Paxos General Counsel and Chief Compliance Officer Dan Bernstein at Paxos. Coming up, checking in on Asia and the crypto markets analysis with digital asset trading platform Crosstower. Time now for the daily forecast and update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, April 26th, 2021. I'm Angie Lau. Let's get you up to speed from Asia to the world. Chinese fintech giant Ant Group now taking a more active role in China's rollout of its digital currency, the yuan. People's Bank of China, China's central bank, now using Ant Group's self-developed Ocean-based database to grow DCEP's capabilities. Ocean-base is a massive, independently researched, decentralized collection of data. Since it was created in 2010, it helped Alipay grow rapidly as a leading mobile payment platform. Media in China celebrated this as moving forward and upgrading to serve the real economy. This is a far cry from when Ant Group's parent company, Alibaba, was the target of Beijing's punishment for violating China's antitrust laws. Ahead of China's May 5th shopping festival, many major banks are also asking retailers to promote the eCNY, the yuan, namely to ask customers to download the digital wallet. They're being tested as payment alternatives to Alipay and WeChat Pay. And it all boils down to China's handling of the fintech disruption there and how its digital currency can perhaps be a tool to undercut the dominance of internet giants. Ant Group declined our request for comment for now. Meanwhile, top e-commerce firm JD.com also taking steps forward with the yuan. Local news in China reporting the company is the first ever to have paid some employees' salaries in digital RMB. JD.com is also touting the new form of employee payment at the Digital China Summit happening this week. The payments were first made in January of this year to employees in 5 cities, where employees are able to deposit their digital RMB salary into their personal bank cards or use it at locations where the digital currency is accepted, which isn't many, at least not yet. China is expected to invest more R&D in blockchain tech as grand plans from Beijing filter down to municipal and regional levels. All right, let's see how Bitcoin was priced by the end of Asia's trading day today. It was at the 53,000 mark by 4 p.m. local Hong Kong time. That's a rise of around 6% compared to the same time yesterday. And here's the top 10 in cryptocurrencies by 4 p.m. Hong Kong time as well. Most of them bounced back after the tumble last week. Ethereum up 12%. We're seeing a rise in DeFi platforms. Uniswap was one of the big gainers with more than 18% surge in the past day. And for many retail investors, Ethereum gas fees are becoming a little too high. That high transaction fee has become a boon for centralized DeFi or Binance Smart Chain. And so much of the boon that the decentralized exchange PancakeSwap's transaction volume surpassed the entire Ethereum blockchain on Doge Day last week. And over the weekend, it completed its V2 migration. Its crypto, called Cake, is up 22% in the last 24 hours. Anyone can create a token and sell it on PancakeSwap, but of course that caveat is what goes up must come down eventually. All right, a day of choppy trading in the equity markets in Asia. The Shanghai Composite and Hang Seng eased off gains from earlier in the day and ended lower. And finally, I want to leave you with this. Over in South Korea, there's growing scrutiny of the crypto bubble and it's forced exchanges to act. Top player Upbit adjusted caps on one-time and daily fiat deposits, limiting one-time transactions to under $90,000. But that won't worry a lot of small-time traders, but it will be a barrier to big spenders, or whales, as the cryptosphere calls them. Upbit says the change is due to the country's financial watchdog urging better policies against money laundering. And that's the Daily Forecast. I'm Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. Checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at 53,588. Bitcoin is up almost 7% over the past 24 hours, and the CoinDesk Ether price ETX index is trading at 24.92. Bitcoin, or rather Ether, is over 7.4% up over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And joining us now to discuss the crypto markets is Kapil Rathi, co-founder and CEO of Cross Tower, a digital asset trading platform. Welcome, Kapil.
Good morning. Thank you for having me.
Great to have you. Over the weekend, we saw Bitcoin falling down to $47,000. Bitcoin's back up now. What do we owe this bounce to in the crypto markets?
Yeah, so it's kind of interesting. If you take a step back, it's important to look at what market did in the last couple of weeks since the Coinbase IPO. Going into Coinbase IPO, we saw a pretty significant sort of inbound from retail investors. And as we all know, the Coinbase IPO didn't necessarily do that well. And that's somewhat attributed to the direct listing they did. There was no investment bank supporting the IPO balance there. We saw a natural pullback from some of these direct listings. They happen to be very volatile. And in crypto, what's interesting is any sort of pullback seems to be very dramatic. And it's partly related to the leverage that's offered on some of the Asian exchanges. The leverage essentially kicks off the auto liquidation for some of the futures positions, especially around long positions. And that cascade just kept spiraling down for the entire week, all the way going into Thursday. We saw some, I would say, not so good news. I won't call them bad news. They were just kind of lack of good news in the market last week. We heard about Turkey, South Korea coming in, bringing some sort of enforcement on crypto players there. And this news started bringing some bearish signal. But overall, I think it was very healthy for the market. It literally flushed out the leverage from the market. And on Friday, we saw some really bullish signals after the European market closed. The sort of price prints we were seeing were very similar to what you see in an institutional market. There were some large OTC trades. There were some VWAP-based trades happening on Friday. And that tells us that institutions are looking for opportunity to buy the dip. And that sort of brought the bullish sentiment back in the market. Going into Sunday night, we saw a minor dip around CME futures market open around dinner time on Sunday, but that was primarily related to lack of liquidity. And then once the leverage is flushed out, kind of bad news is behind us. And there's a lot of sort of kind of interesting news coming this week from hopefully Tesla, MicroStrategy. They will at least, we hope that they will share some news about how they are managing their Bitcoin position. So I think the market is much more healthy and sort of kind of stable at this point.
So Kapil, they've obviously we've lowered the leverage in the market for now, but with the rebound, could we likely see a return to leverage as retail investors start looking at this bounce and say, well, now it looks bullish as ever, and they jump back in? Or do you think that we've sort of calmed it down for now?
Yeah, I don't have a reason to believe leverage will go away. Crypto is an interesting asset class. You have Asian exchanges offering 100x, 125x leverage. So unless there is a market structure change, I don't see that phenomena changing. What's important is for investors to understand that these type of moves are very natural in crypto. A 5 to 10% downside move should not scare. If you get scared by that type of move, this is not an asset class for you. Overall, I think the macro indicators are really bullish. You talked about JP Morgan news coming in. So I think the institutional adoption is going to continue provide the stability in the market.
Can you talk a little bit about the role of Chinese miners in these price fluctuations? Because, there was talk that because there was a power outage in China, so this affected the price. And how important are Chinese miners in driving the price of Bitcoin?
Yes, that's a very interesting point, and that was also one of the reasons why we saw some dip towards the end of last week. I think it kind of raises an interesting fact about the sort of localization of some of these miners could have a sort of kind of long-term impact on the health of the industry. But what we saw with the power outage in China, the hash rate actually went down pretty significantly. So in a scenario like this, I think the market just has to kind of get used to these type of nuances. The beauty is, of course, China is a fraction of the total mining community. And then market did recover after that, but it's an interesting lesson learned for the whole market.
Kapil, great analysis. I appreciate your time and coming in this morning.
Thank you. Thank you for having me.
All right, that was Crosstower co-founder and CEO Kapil Rathi. Coming up, why privacy is a hot trend in the blockchain space, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, our Spotlight guest recently raised $28 million from Mark Andreessen, Coinbase, and others to increase privacy on blockchains using cutting-edge technology known as zero-knowledge proofs. Please join us in welcoming Alio CEO Howard Wu. Welcome, Howard.
Hi, thanks for having me on.
Yes, Alio, rather. All right, so in the digital economy, not only can our information be tracked, but also our financial transactions. So if someone knows your Bitcoin wallet address, they can track all your transactions. So what is Alio building to better preserve our privacy, and why is that important?
Yeah, so at its core, in the next decade, web services are going to be everywhere. They're going to live in more places than just your browser. And they'll reason about a lot of intimate details about our personal lives. And what Alio's seeking to do here is to build a user experience on the web that is both truly personal and truly private. The idea is to not have to compromise and to provide web services and users a far more incentive-aligned platform to effectively build private applications on.
What is the difference between what Alio is doing and other privacy-focused blockchains like Monero and Zcash?
Yeah, so at its core, there's really two verticals to evaluate blockchains on. There's programmability and there's privacy. Bitcoin, as we know, is very low on both. It offers pseudo-anonymity, and it's primarily focused around money. Ethereum went one direction to offer high programmability, but still offered low privacy. You see blockchains like Zcash, which go the other direction to offer high privacy but low programmability. And there's this upper right-hand quadrant of high programmability and high privacy that effectively Alio achieves. And so, the difference here really between things like Monero and Zcash and Alio is the difference of private money and private applications.
So we know that regulators generally don't like private things. Are there any regulatory tensions with developing this technology?
It's a great question. At its core, actually doubling down on this concept between private money and private applications, we see right now with private money, there is a lot of regulations that are coming up with respect to KYC and AML. You see that FATF and these different organizations globally are starting to look and take a much closer look at that. On the other hand, I'd say with private applications, it's almost going the opposite direction. That You see things like GDPR, CCPA, at least in California, where there's far more laws around data privacy, application states, and what can be reasoned about by different parties. Certainly in specific regulated industries, whether it be banking or say healthcare, there's even further compliance needs on that front. And so I'd say that in this case with private applications, it almost opens a door that allows you to take this type of technology and make it far more practical for real world applications.
So, Howard, what sort of safeguards are you putting in place to monitor, say, bad actors, or are there none?
No, that's also a very important part of this system. So one of the things that we've built into the core of Alio is specifically view keys, and in this case, for regulators, those are effectively audit keys that not only can we see on a transaction level every individual record, you can individually disclose the details of those transactions, but on an account level that you can also provide that same level of visibility. And so, if you're an onboard or offboard mechanism, say you're a VASP or you're an exchange, it's very clear that if you have possession of the private key, it will allow you to also derive that view key and see the entire account history in that particular instance. On the other side of things, one of the things that I think is very powerful about this mechanism, and specifically about zero knowledge proofs, is that we can actually enforce better compliance about an application than the status quo today. Today, if you look at applications, say an exchange, most of the actual enforcement for compliance is done post factum. It's done via audits. What this technology actually allows you to do is to enforce the correctness of your application at the time of use. And so you can enforce before a trade executes that both parties, for example, have satisfied KYC requirements, and that at the time of that swap, that indeed that this is a legitimate exchange that's happening. And so that's something that the cryptography can actually not only confirm is correct, but also prevent from actually executing if you don't satisfy those requirements.
Everybody loves the idea of privacy in theory, but when it comes down to practice, a lot of people are very willing to sacrifice privacy for convenience, including in the crypto world. Have you really seen evidence that people really care enough about privacy to use these kind of platforms?
I think on a day-to-day level, if it's not convenient, people tend not to use it. And I think that as the stakes get bigger, especially as the size and the value of cryptocurrencies continues to go up, this will become more and more relevant. We're already seeing, at least with larger institutions, who, including many of our investors, who are holding large amounts of top 10 coins, for example, it's a very big deal to them when they want to move an asset. And even more so for some of the smaller coins, let's say the long tail of ERC20s, this is also an issue because every time that they move those into an exchange, it's very clear that they're likely going to take some action on it. And because of the small market for those long tail coins, it's actually very easy to move those markets. And so as part of that, there needs to be better protection mechanisms built in. Otherwise, not only does this make a system susceptible to front-running attacks, but also just arbitrage attacks. And we're seeing that now actually on Ethereum, that this is a prevalent case, not only by miners, but also just by traders themselves.
Yeah, privacy is certainly a hot trend. Thank you so much, Howard, for joining us this morning and talking a bit about your new project.
Thank you, and thank you for having me on.
All right. That was Alio CEO Howard Wu. Time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hi, Nick. How are you doing?
Hey, good morning.
Some crazy stuff going on in Turkey. I mean, last week you told us about the exchange Thodex going offline. Their CEO went missing. What's the latest update?
Yeah, there's a lot that's happened. So Turkish officials have now detained a number of individuals in relation to Thodex. They're still, I believe, looking for the CEO, but they are, they've moved to shut down its bank accounts and they're conducting an investigation. Separately, another crypto exchange has been shuttered called VBit Chain, I believe. Sorry, don't quote me on that. That's been shut down. Turkish officials are, again, looking for folks affiliated with that platform. Again, they're, concerned about, whether or not the exchange has the funds it's supposed to have. And possibly related, the, more officials, senior government officials, are now threatening further crypto regulations, although they do seem to have ruled out an outright ban. So we're not going to see crypto banned in Turkey, it looks like, but there will be additional regulations. And, I don't know for sure if it's connected to the fact that these exchanges have been, collapsing, but the timing at the very least cannot be helping.
Nick, you've also been watching in developments in Korea as well. What's going on there?
Yeah, so it looks like there might be a increased crackdown on crypto exchanges there. Senior finance officials have been warning that they're kicking off a special enforcement period, as reported by our colleague in CoinDesk Korea, Felix Im. They're looking at any companies that are not compliant with new laws that have gone into effect. Furthermore, one of their senior finance regulators said in a speech last week that exchanges that do not register could be shut down by the fall. So far, no exchanges have registered, and there is some concern that because of the way these new laws are set up, only the top 4 exchanges, the biggest 4, could continue operating after this year.
So, Nick, am I correct that there was some police action with at least one of the exchanges, or at least former CEO?
Yeah, it looks like the former head of Bitum might have been arrested. I'm a little vague on the details, but people are getting arrested for this.
All right. We'll keep watching those developments. Thank you very much, Nick, for joining us.
Thank you.
That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now for the crypto tweet of the day. This from a pseudonymous blogger, Zero Hedge, giving a shout out to CoinDesk on Danny Nelson's scoop that JP Morgan is offering actively managed Bitcoin as a fund. We're saying that, so that's why JP Morgan was talking down Bitcoin for the past 3 months. A lot of reaction on that story this morning on Twitter. All right, that's it for First Mover. Coming up tomorrow is special guest OKCoin CEO Hong Feng. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.